Hello, everyone, and welcome to episode 10 of the New Traders Playbook. Today's episode is going to be a combination of a lot of stuff that we've been talking about. And now that you know what you need to do before you trade, during, after, like we talked about last week, and you understand where support and resistance is, things to look for, now we're just going to jump into the charts and we're going to talk specifically about how to take trades. We talked a little bit about this earlier on in our beginning episodes, but today we're going to just take a deep dive and look at exactly what we need to do in order to take trades in the market. So let's take a look now at TradingView, which is what I have been using for all of these episodes. You can get a free TradingView account. If you look into the information on this video, you'll be able to find a link. If you click on that link and you use it, if you buy a subscription, you'll be able to get $15 off of your second subscription. So feel free to grab that. And so let's jump right into the charts. So what we are looking at now, of course, is live price. And we are going to take a couple of examples, obviously on paper trading, so that we can see what do you do if you want to come into the charts and you want to start taking orders using all the information that you've learned, using a strategy that you've well back tested. What do you need to do first? Okay, so if you're using TradingView, even if you're not and you're using a different brokerage or a prop firm, a lot of them are going to fall into the same concepts of how to execute buys and sells. Now we're looking at the NASDAQ. Here is a 5-minute chart. And one of the first things on NinjaTrader that you're going to want to look at, you'll right click here and then you can go into your settings. And the settings section has one on trading. Okay, so you'll notice here it's got buy and sell buttons. So some people like those and some don't because they are directly for market orders. You can change those, but you have this option and then you also have one-click trading. Now what that means is it says they're instantly place or edit orders. If you are afraid at the beginning that you don't want to accidentally enter an order, which can happen, you can uncheck this. When you uncheck it, what it's going to do, I'll show you. If you were to push the buy market button, remember a market order means an instant entry. You may not get the exact entry that you thought you would because it takes it as soon as possible, regardless of what price is doing. So if I click buy, this box is going to pop up. This is giving me my order box. You'll see it's here on market, buy at this. If I wanted to set up a take profit or loss, cool. But the whole point is that it is requiring me to say, are you sure about this? That's why, because we don't have one step on, right? And then if I wanted to, I would go ahead and I would click buy. And now I would instantly be put into an order, a buy order right there, okay? And if I want to close the position, all I have to do is hit the X. You'll notice we're still in that location where we are required to give that second heads up. Do you want to close this position? Yes. Now, the problem with that is it might be a little problematic because maybe you want to get in and out of trades and you don't want to take the extra few seconds, which could mean some lost money. So you're going to have to decide whether it's worth it for you to have that secondary issue, that one-click trading or not. If I had one-click trading on, this is what you'll notice. You'll see here that if I buy, it's instant. Let's exit that trade. So now what do we need to do? Well, there's a couple of different things. If you want to enter an instant trade, as you're looking at here, you can hit one of the buy or sell orders, and it will instantly get you in if we talked about. Here's our example, boom. Now, the nice part about TradingView is that it comes with these two buttons, the take profit. So since we're in a short, you could pull your take profit to wherever you think it'll go, and then you can pull your stop loss to wherever you think it will go. At any given time, you can always just exit, close the position, and take the profits from that point. But we know closing early is not always a good thing unless you know that your idea was broken. So we want to go into each one of our trades thinking, why do I think it's going to go up? Why do I think it's going to go down? Where's the location it shouldn't go? And where's the location it will probably go? That's how we're going to determine our entry, our take profit, and our stop loss. So let's say in this scenario that I feel like that line right there is a really good place to short. So I can right click right here and I can actually go to a sell order. Now what we're looking at is a sell limit. So instead of instantly getting into price, I want price to come and pick me up. And let's say I think that the most it should do is the top of this. And let's say I think it's going to go all the way down here. This is something you'll figure out the longer you practice and the more you take time to figure what your strategy should be, what strategy you like, and how you're going to determine what stop losses and take profits look like. Okay? So as you can see right here, we're waiting for price to come up to that halfway point of this wick. Patience is key, okay? That is the number one thing. You see me talk about it on this page a lot because what might happen is it's not getting there fast enough. So you pull your sell limit down. You see what's happening to the stop loss? If I was impatient and I said, oh, I want to get in right now, you see that the stop loss is getting smaller and the stop loss is getting bigger and the take profit is getting smaller, right? Your patience, requiring the market to give you solid quality trades is going to be the best thing you can possibly do, not only for your mental, but also for your future as a successful trader. So we're sitting here and we're waiting. Maybe we've thought up some ideas. Maybe for me, I'm thinking, okay, I like that we're in a slight bit of a downtrend, not super, but I like the location. I'm a big fan of these wicks. And I think that if it's going to reverse, that it may want to get to the midpoint of the wick and then fall. Now, what happens if it never picks me up? What happens if price goes here, it got super close, and then it just falls all the way down? Okay, that can be really stressful. That is the type of thing that can cause FOMO. What can often happen is price will come down, and now you're annoyed that you didn't get in, and then it goes down farther and you're even more annoyed. So then you decide to get in right here. Well, your risk to reward ratio might not be as good. Your entry, maybe the stop loss, should still be at the place where you thought it would be before. All of those things are essentially parts of trading that you're going to have to become comfortable with over time. Practice doesn't make perfect, but it does make things a little bit easier over time. Now, waiting and waiting and waiting, I've heard it said many times that trading, successful trading, is 90% waiting and 10% executing. We have to be able to train our minds into waiting for the best trades. Now, if your risk to reward looks good, and you think, well, it's okay for me to get in down here because I'm okay with this risk and this reward, well, then that's something you can do, definitely. But the most important part is always follow your rules, okay? And if it doesn't work out the way you want, you can't get angry. You can't have FOMO, right? Because FOMO blows accounts nonstop. Ask any trader who's ever traded. FOMO, fear of missing out, is what is blowing trades left and right, okay? So we have our setup, we have our location for entry, we have our location for the stop loss and for our take profit. In this video, I'm not gonna really talk about good strategies that you can use. There are honestly hundreds of strategies. You can find strategies all over the internet. And interestingly enough, it's not to say that some strategies are just the absolute best and some are just trashed. Technically, probably true, but the most important part is that it's not your strategy that makes you successful. It's your mind. It's your ability to follow the rules, right? Let's say that you tested this specific strategy, whatever we're doing right here. You tested this and you tested it again, you tested it again. Maybe you back tested 100, 200, 300 times. And you know that this strategy with essentially a, maybe 1-to-8 type of ratio, this strategy works 40% of the time. Okay. What does that mean? If you lose and then you lose and then you lose and then you lose, you're still inside of your 40%. You're still there. So you have to let the strategy work. Right? We could have entered much lower and price may never come and get us in this specific setup. Not to say that this is a good setup, but it is something that we can use that has rules, that has regulations, that has this set parameters that you can follow every single time you take a trade. The more consistent you can make your trades, the less random they become. And remember, we talked about that last couple of weeks. The more random your day is, the more random your trades are, the more random your results are going to be. And the last thing we want to do is have random results. Okay. Now, let's take a look at what this would look like if I change this to higher amount. Let's say we have 5 sell orders right here instead of just the 1. And when there's 1, obviously you can have 1 entry, 1 exit, and 1 take profit, right? 1 stop loss, 1 take profit. But there's also something that you may be interested in doing. If you're taking a trade, remember, it needs to be a part of what you have back tested. It is a part of the strategy. It's not just something you think sounds good, but it's a part of the strategy. So let's say that you want to separate these. It's a little bit different on TradingView in your different places that you trade. But let's say we just wanted to have 1. And I'll need to do this. Let's say we're in cells, right? So we've got 1 here, and maybe I'll just bring that down to 1. This is a little bit more convoluted. There's some other ways to do this. But what we would have here is maybe I want to take some profits a little bit earlier if I get into this. So set 5 sell orders. And then maybe I think, well, I'd really like to get rid of one of them right here. So because of TradingView issues, let's reset this. That was there and that was there. Okay, so now we have 2 contracts. Okay, that's fine. We got 2 contracts here, and it looks like we have $820 for our stop loss, $5,200 for our take profit. Now, if we wanted to take some off or decrease the amount of contracts that you have, there are a lot of different ways to do that. Maybe your rule is that between your entry and between your exit, when you get to about halfway, you're going to take profit, but you're not going to take the full profit. Remember, it's all about being inside of the strategy that you tested. Does this work? Is this the right choice? So what you would do is you would have one of your orders, a buy limit here, and then this one would shift down to 1. Right? Once you sold 1, then this one will become 1. taking one off at a very specific location, a location that price might reverse. So you can either do it halfway, you could do it 75% of the way, or you could just do it structurally according to how the market works. So if price comes down and you say, okay, there's a really big location, for example, we know that wick zones often like to offer support and resistance. So maybe I say, okay, well, when price gets down here, I'll show you the example. When price gets right here, I want to get out. Why? Why would we do that? Why would we half the size of our position right here? Well, one of the big reasons is because when price comes down, it's possible that when we get to a solid support level, that price could return all the way back up to this stop loss area. We don't necessarily want that to happen, right? So we say, okay, I'm going to take profit on half of my position right here, which will allow me to get some profit. But I'm not going to take it on all of my position, because if I took it on all of my position, what happens if price comes down and it hits this and then it comes up and you're like, oh, I'm so happy I took one off, or I didn't, and then price goes all the way down to here, right? So now if you took off 2 right here, then you would not have an opportunity to get down here, get a little bit of extra money, right? So there's a lot of different ways that you can manage your trade, because that's what this is. This is trade management, right? Now, as you can see, price has stuttered in our area. It got us in, pulled a little bit back, and it's now heading up towards where our stop loss is. Okay, so what are we not going to do? Well, we're not going to see it get close to our stop loss and go, oh, okay, well, I'm going to move it up a little bit, and then see it get closer. Oh, well, maybe I was wrong. Remember, in the last episode, I said if your stop loss was wrong to begin with, then your entry was probably wrong too. Okay, so be very careful, because look at what's happened to our risk to reward now. Now, instead of our risk to reward being 800-ish to 5,300, now if we pull this all the way up here, now we're changing the odds. Let's take a quick look at what that would look like. If we were in a short position and we had, oops, we'll put that right there. We had this, and at our original stop loss, we had about a 1 to 7. Fantastic odds. I love it. But now if we get close to our stop loss and we're scared, right? We're moving it back. Oh, okay, I can't lose. Remember we talked about ego recently in one of our episodes. I can't lose. I have to push it back. I don't want to lose. I'm not a loser. I'm not a loser if it doesn't ever hit this button. If it never hits my stop loss, I'm not a loser. It could come all the way up here and then come all the way down, and then I'm going to make lots of money. Okay, sure. But if we move this up to here, for example, look at what happens to the risk to reward ratio. It goes from that 6.78 all the way down to a 2.2. That's a huge adjustment. Sometimes when we're scared of losing, when we fear that ego hit, saying, I'm not a loser. Yes, actually, we are losers. We want to be the best loser, as we talked about in a couple of episodes ago. So what we have to do when you set this trade up, when you back tested this structure, when you back tested all those 100, 200 trades, where was the stop loss? Because if this is where the stop loss is, now, if we start moving things and shifting things up higher and higher and higher, you know what that does? That changes everything about your strategy. This is not how you tested your strategy. This is not what it looked like. This is what it looked like when you tested your strategy, okay? If in the middle of our trades, we get that fear, right? That fear of missing out on a good trade, that fear of losing, and we start inching back and inching back and inching back, that is what is going to ruin our results, because they're no longer based on what we tested. We're changing things completely. Now, if this is your strategy and it looks like this and you've tested it 100, 200, 300 times, fantastic. Keep it up, because that is rule following. That is how you are successful in the market. But if this is where your stop loss is supposed to be, if that's how you tested it, if that is what gave you those 40%, if that is what gave you that 6.5 R that allows you to make money when you have your 40% win rate, this is how it has to stay, okay? But remember, you're going to have to put in the work. You're going to have to back test your strategies. You're going to have to see, what do you like, what resonates with you. Take a look at other videos that show you types of strategies. Like I said, there are hundreds of strategies out there. And the crazy part is most strategies will work. It's not the strategy. It's your ability to stop moving your stop loss. It's your ability to stick to your rules. It's your ability to be patient, allow trades to come to you, not jumping ahead of the gun, right? That is how you become a successful trader. That is how you follow rules. That is how you make money. And hopefully now you have a little bit better idea of how to push buttons and where we can take profits, right? If we take our profit, you'll notice right here, now 1 and 1, you see that everything shifts. And now we only have 1 contract each, right? So that is how easy it can be. So thank you so much for watching this video. I hope you enjoyed it. If you did, feel free to subscribe and like, and I will see you in the next episode.